Well, thanks for joining us here on the Market Day Report on a Monday. I'm Marlon Bowling with you, and happy Halloween to you. We're going to take a look at your ag commodity trade here in just a moment. I want to start with our outside market. So the crude oil has been slipping here a little bit here in the last few minutes. And right now, your West Texas Intermediate crude is showing a last trade on December 47.59. That's down $1.11. January down $1.12. And in the U.S. dollar right now, overnight it was up about 200 points. It's still gaining. We have December now 280 points higher. It's trading at 98.630 on the December U.S. dollar index futures. So I just wanted to point that out. A couple of fairly sizable moves going on in our outside markets right now. Grain markets have been fairly flat, and here to help analyze what's going on, let's go to the trading floor in Chicago, where we have none other than OliverSloup standing by. He's with II Trader, and good to have you with us here on a Monday. Happy Halloween, Oliver.
Hey, same to you. Happy to be on.
All right. So tell us about this grain trade here. It seems like about the most action going on happens to be in the wheat trade today. How come?
Yeah, wheat is definitely finding some support here despite a little bit stronger of a dollar. I think a lot of this is technically oriented. We managed to hold pretty good support to round out last week, although we did finish on a little bit softer footing. But we have regained some of that strength. 417.5 is going to be the key level to get out above. If you look on a chart, kind of forming a wedge, which either indicates that we're either going to break out or break down. And I wouldn't be surprised to see that happen here this week. Now, we've been talking about the funds and their net short position for a long time, and we've been waiting for them to kind of press the buy button to cover their short position. They've been in no hurry to do so, but I think if we're able to get it back out above that 417.5 level on a closing basis, we could see funds start to cover in a little bit bigger of a way. We saw on Friday's commitment of traders report they're still short about 123,000 contracts, so that's relatively significant. And if we do get out above those levels, I think there's some pretty good room to run. Now, you had mentioned the currencies a little bit ago, the U.S. dollar. That's going to be a big factor for this week's trade across the commodity spectrum. We have a Federal Reserve meeting on Wednesday, and then on Friday we have non-farm payroll report, and that will inevitably play a role in the dollar's price action, which will spill over into commodities. So something to put on the radar throughout the week.
There was a lot of jumpiness in the trade for the dollar and the Dow Jones Industrial Average on Friday right before they closed up, wasn't there?
Yeah, there certainly was. We saw the stock market kind of retreat on the news that the FBI is going to reopen an investigation on Hillary Clinton. We saw the S&P and Dow Jones kind of fall, and the dollar as well. And that put a big boost in the gold market, which was one that we kind of had our eye on. So there's so many different factors at play, both technically and fundamentally, not just necessarily on a micro scale, but on a much global macro scale as well, that's playing a role in these grain markets.
Okay, let's take a look at our futures trade. We'll walk through these grain markets here, starting with the corn. Right now, boy, it just couldn't be much quieter. December corn up 1/4 cent, just one tick at 3.55 1/4 per bushel. That is just one tick off of its high of the day, though. March corn now down 1/4 cent at 3.63. That's off of its high by 2 ticks. The entire trading range, including the overnight hours, is only about 3 cents anyway. On the soybean trade right now, here you have January down 1.5 pennies at 10.1 per bushel, and March down 1.5 pennies at 10.17 per bushel. So just slight weakness here in the soybean trade. And then in that wheat trade we were talking about, we've been firmer all morning. December Chicago wheat up 4 3/4 at 4.13 1/4 per bushel. Kansas City wheat on December now trading 3 higher at 4.14 1/4 per bushel. And in the Minneapolis spring wheat trade, we have December 1 3/4 higher at 5.26 1/4 as they appear to be reversing those spreads once again today, where Minneapolis had been gaining for several weeks on the other two exchanges. Then if you look at the cotton market right now, on December, we are currently down 61 points. Last trade, 70.21 cents per pound, in a little profit taking place in the cotton market today after a surge last week. We'll come back in a moment, and we'll talk more with OliverSloup of II Trader in Chicago, this time about the livestock trade when we come back right after this. Don't go anywhere. Well, we're back, and we're talking with OliverSloup of II Trader in Chicago. He's positioned at the edge of the CME Group trading floor. And we talked about the grain markets being fairly quiet, except for the wheat showing signs of firmness here today. But if you look at the livestock trade, In fact, let's go ahead and dive right into these prices here, Oliver, if you don't mind. On the live cattle market side, we have the December contract now showing a last trade of 103.90 per hundredweight. So we're under 104 now. We're down 45 cents on the day. We have February down 14. Last trade there, 104.78 per hundredweight. On the feeder cattle side, we have the November contract now 25 higher. Last trade 121.80 per hundredweight. January up just a dime at 116.10 per hundredweight. March is unchanged. So this cattle market seems to be kind of treading water here, and this is after we apparently seem to have a lot of profit taking right at the end of trade on Friday. Can you attribute that weakness that we saw at the end of the day to anything more than that or not?
Yeah, I'm not putting too much into it. I think treading water is probably the best word used to describe the market here in the early morning session. Obviously, still a lot of time to go throughout today to get us set for a good tone to round out the week. Now, a couple levels we're looking at, both live cattle and feeder cattle, both kind of on both sides of the market. So we are just right in the middle of some ranges. For the December live cattle contract, 105 has been a big technical resistance level for us. We got above there, traded above there last week, but I want to see some sustained trade above that to maybe encourage some new buyers to step in. If we aren't able to do that, I wouldn't be surprised to see us retreat back towards that 100 even level, which you might see some buyers come in. But we're just kind of trading the range until we can get a breakout or a breakdown. As you and your viewers and I know and everyone knows that the market's been very depressed lately, so it's hard to pick a bottom. So we're waiting for more confirmation. We'd rather be buyers on strength than trying to step in there and catch a falling knife. And that can be said for both the live cattle and feeder cattle market.
How much of that action that we saw on Friday do you think could be attributed to the end of the trading month that is today right now? Do you think that was an early start on that?
I think there might have been an early start to that. Again, I wouldn't put too much into it. It was nothing out of the norm. We've seen volatility in the market on the opens and on the closes for several months now, and that's going to continue to play out, whether it's the last trading day of the month or the first or even in the middle of the month. The volatility oftentimes invites more volatility, and we don't expect that to go away anytime soon. Now, the feeder cattle, we're kind of right in the middle of a range, too. We're kind of moving more towards the January contract. 120 and 115 is the range we're playing. Hopefully we can get some stabilization above that 120 level to get some more upward momentum here in the near future. But until then, again, kind of just playing the range and given what the market's giving us.
Well, we seem to have differing opinions on whether the temporary closure of that Tar Heel packing plant in North Carolina, that would be one of the plants owned by Smithfield, whether that was bullish or bearish for the lean hog trade. The jury seems to kind of be out on that. We'll take a look at our lean hog prices right now. If we go to the big board, just modestly higher. We have December lean hogs 25 cents higher at 47.05 per hundredweight. February up 35 at 54.35 per hundredweight. So we have cleared $47 now on the nearby December contract on the lean hogs. Now, it wasn't that long ago here. Oliver, what was it, a week and a half ago? We had a low on December of 40.70, I believe, and turned around and never did go below 40 bucks. A lot of folks were kind of waiting for that. Looks like maybe they missed that boat.
Yeah, we might get back down there.
Really?
As with the live cattle, the lean hogs have been very volatile. We did get above some key technical levels. We're looking at the 40 to the 45 level, trying to trade that range. We've kind of stabilized above that 45 level, so that's now going to become technical support. We're looking to be buyers on the first test back down to that level. If we do break back through, I wouldn't be surprised to see lower lows in the near future. Now, with that said, we are trying to stabilize here, and it'll be nice to see that carry out throughout the rest of the week to really get us in a good position to maybe call a near-term bottom. Until we get a couple more conviction closes above technical resistance levels, I'm not going to go out on a limb and say just yet that the low is in, because I know there's still a lot of people around here looking to sell at higher prices.
All right, very good. Thanks, Oliver, for the comments on the trade. OliverSloup with II Trader in Chicago. Very quiet in the hogs right now, and the cattle market is kind of mixed as well.
All right, thank you very much.